This is that time of the day when we look at personal finance questions. The markets are improving a wee bit, so we will attend to them after a bit. For the moment, personal finance, and our expert Nikhil Kothari of Etica Wealth Management has joined us in the studio. Nikhil, thanks a lot for joining us. Well, first up, there is a caller already. Evinder Singh is calling us from New Delhi. Mr. Singh, go ahead. What is your question?
Hello, Latha. I have a question on CPSE ETF, Goldman Sachs.
Okay.
I want to know how an investor should go about investments in ETFs. I believe currently it is not very much liked or invested upon. And if I want to have a long-term view of 10 to 15 years, how can I be benefited?
Fair question, Mr. Singh. Nikhil, how does one buy and how does one monitor? Should one buy the Goldman Sachs public sector ETF?
Okay. See, Goldman Sachs public sector ETF is an index which invests in top 10 PSU companies. So basically, if someone wants to take exposure in PSU companies, this is one of the very good ETF index. But the only thing is that it comes with a very concentration risk, because the top 3 stocks constitute around 52% of the overall portfolio. Which are ONGC, your Oil India, and GAIL. So in terms of exposure, so it's not a very well diversified portfolio. It's only 10 stocks, whereas and it also comes with a very high concentration risk. So, but if someone have a view that PSU as an index should do good over a long period of time, based on the disinvestment policy or based on any action taken by the government, that can be a very good bet for long term.
Okay, Mr. Singh, any more questions?
Are there any other ETFs apart from Goldman Sachs wherein I can invest Nifty ETFs in particular?
Yeah, actually that was my question as well. Would it be a better idea to do a Nifty ETF or some other kind of say even a pure equity fund, say one of those mutual funds, HDFC Prudence, or pure equity fund where the fund manager has more freedom? If PSU stocks are looking overpriced, he can go over to private sector. Is that a better option, or is the Goldman Sachs ETF for public sector enterprises a better option?
Okay, so Nifty is a basket of 50 stocks, and which gives you representation of 22 sectors. So overall, from a diversification perspective, and if someone wants to take a participation in the overall market of the equity, then in Nifty ETF is a far better option than a PSU ETF. And in terms of actively managed fund, obviously what you see in the Indian history is that actively managed fund has outperformed the benchmark by good margin. So actively managed fund is even a better option than an ETF.
All right, so I hope that answers your question, Mr. Singh. A Nifty ETF is better than only a PSE ETF, and an actively managed mutual fund is even better than an ETF, since actively managed funds have a record of outperforming the Sensex and the Nifty. Thanks a lot, both Mr. Singh and Nikhil, for joining us with that Q&A. The markets